loan growth has been 25% year on year. We had guided 20% plus, but we are seeing a clear pickup in loans as we look at the environment. The second important point in that context is that our consolidated profit after tax has grown for the last quarter at 27%, and the bank standalone has grown at 15%, but that is after a one-time hit which we had. You're all aware that there was a change in gratuity policy on 29th of March, which increased the gratuity limits from 10 lakhs to 20 lakhs, as a result of which the bank had to make a provisioning of 82 crores, which we took the hit in the fourth quarter. And if we adjust for that one-time hit, the bank's profit after tax growth would also be in excess of 20%. In that context, I also wanted to share with you that we have not taken benefit of any of the forbearance schemes which the RBI had announced, either on account of MTM amortization, nor on lower provisioning for IBC accounts. So we have continued with our policies exactly as they were even before these circulars came in. On the stress side, which obviously is on the top of the mind for most of the people in the banking and the financial sector, I am happy to report back that our net NPA now is below 1%. We are at 0.98%. And our overall provisioning costs, which for the year ended March 17 were about 61 basis points, are now down to about 56 basis points. In fact, last year when we had reviewed our numbers, we had said that we see credit costs actually trending down, and overall provisioning numbers coming down from 61, 62 basis points to 56 basis points is consistent with what we had shared with you. We are also very heartened to share our SMA2 numbers, which is the 60-day plus overdues on 5 crores plus loans. And our SMA2 numbers now are at 0.04% or 72 crores only, which I think as a percentage would be probably amongst the lowest in Indian banking. Therefore, we actually believe that with the picking up of the microeconomy, and as long as we drive our car carefully and conservatively, I would believe that going forward also we see the provisioning costs trending down, subject to markets on the bond side. So while we have not taken any carry forward, bond yields are something which we are obviously keeping a close eye. I'm also happy to share with you our significant improvement in our stable and low-cost liabilities, which is CA and SA. And I'm sharing with you numbers which are not only end of period, because end of period you can see bump ups and downs which are inevitable. Therefore, I'm giving you average numbers for January to March quarter, because an average does not have bump ups, and that is, I think, more significant, and which we have shared in our analyst presentation as well. Our end of period numbers are also very good, but our average numbers tell even better story. Therefore, our average CA growth is 25% per annum on the fourth quarter average, and our average SA growth is 58% per annum. Therefore, our core low-cost and stable liability actually is looking extremely positive from our point of view. So these are some of the points on the bank side. I also wanted to take this opportunity to share with you something which we are doing for the first time, which is our life insurance subsidiary. As some of you may be aware, in October 2017, we completed purchase of our stake from our joint venture partner, Old Mutual, and our Kotak Life Insurance became a 100% subsidiary of Kotak Mahindra Bank. And for the first time, we are now reporting our Indian embedded value, and our numbers there again are something which I am very happy to share. Our embedded value numbers, as vetted by independent actuarial experts and auditors, is 5,824 crores, our embedded value of the life insurance company. Our value of new business margins, which is a very important parameter in life insurance, is at 29%, amongst the highest amongst the life insurance companies. And we have a very good product mix, and therefore I'm happy to report excellent performance in growth of our life insurance premiums, which are also close to around between 26 to 30% growth rates is what we are seeing in our premium growth. Our other businesses across, if you look at securities, investment banking, asset management, assets under management have grown by more than 30%, which is the mutual fund and offshore asset management business. Therefore, the true business model which we care about, which is concentrated India, diversified financial services, is something we are beginning to see growth across different segments of our financial services business. As we enter 2018-19, we are more than a month into it. We actually go with a certain quiet level of confidence and see ourselves looking at an opportunity to have sustained long-term growth from here. With that, I will now, Jamin, you want to add something, or we will open up, Deepak? Or you want to? Let's open up for Q&A and take it forward.
So you mentioned about credit costs trending down subject to volatility in the bond markets. So from the pure stress perspective, we don't really see provisioning jumping higher. But on the bond side, RBI has now eased investments for FPIs, and people expect yields to fall down. Could you give a sense on what does it mean? Will the fall in yield be sustainable?
The way I look at bond yields is that you've got to look at it in the broader context of the global situation and the domestic situation. And one of the most important factors from an Indian point of view in terms of bond yields is the price of oil. Because price of oil has significant implications on our current account, our fiscal situation, depending on how the government responds to tax treatment, and of course, finally, CPI or inflation. So I think the Indian bond markets are certainly sensitive more than anything else to the price of oil. And of course, on RBI moves with reference to where do they go from here on the repo rate. Therefore, our view on bonds is conservative, and we do not necessarily want to take an excessively bullish, or for that matter, hopefully, not an excessively bearish view as well.
You know, what this impacts only is the liquidity. Yeah, but like Uday said, the first two factors have a bigger bearing on the bond yields than just the liquidity. Liquidity can have only short-term bearing, really.
How much the MTM losses for the Q4, or were there any MTM losses?
No, yeah, this is there in our overall investment provisioning. So we have not carried anything. We have just taken it all.
Same as goes for the gratuity part.
That's
Yes,
correct.
Everything.
Mr. Kotak, you mentioned that macro affairs as well as how RBI reads the situation will have a huge bearing on bond movement. There is no clear communication coming from the RBI on how they read the situation. For instance, in the credit policy statement, they did revise the inflation target downwards, but when you look at the minutes, it seems to have a pretty hawkish tone. So how do you read this going forward, considering that bond yield will have such a huge significance
Deepak?
overall?
Well, I think they gave an indication on inflation. Yes, definitely. But you normally wait for the minutes to come before you actually act. And when you look at the minutes and you look at what Uday mentioned as the macro level position, I think you tend to be cautious and careful in your outlook, than as dovish as the markets might initially have been.
Would you like to give us a guidance on the provisioning cost for this year, the current year? Where do we see it in 2026? Also, loan growth guidance?
Our provisioning cost anticipation is consistent. We see it trending down as we saw it last year. Therefore, we have to watch the situation. But current view is provisioning cost to trend down. And on loan growth, as I mentioned, we do see a pickup in micro. Therefore, last year we guided at 20% plus. and we are fortunate to have achieved 25%. For the year 18-19, we would guide at a 20% plus loan growth.
So about micro, in which pockets in the loans you see trending upwards in terms of growth?
See, we are seeing construction equipment, commercial vehicles, cars, tractors, also
Consumers.
personal loans, consumer.
Yeah, all of that.
All these are growing pretty well. And even very small businesses are reasonable. SME segment is going through some challenges.
It's a CECV was also the pain area for a few quarters back now. In terms of what is your assessment of the sector now? I mean, you would obviously want to grow risk-free book, but what is different that you're doing?
See, if you go back to CECV, we became cautious in 2012-13, and we changed our views positively by about 2016-17. Since then, we have had a reasonably positive view on the CV cycle and the CE cycle. And we right now see a continuing growth in demand, particularly roads, construction. Activity is going on at pretty good pace. And therefore, I am quite bullish microeconomic growth. I would be of the view that this year's GDP growth should be 7.4 to 7.5%.
You mentioned about stress in SME. Now, this is quite contrary to what people are expecting. With GST formalization, they are expecting more demand from the MSME side. What's your thoughts on that?
My views, see, there are two parts to it. The historical MSMEs have gone through pain for readjustment to the new world, which is post-GST world. As people settle down, things will get better. But some of the business models of MSMEs, which were dependent on, at some level, tax arbitrage, those models have to change. And this is what you're seeing is a transition from an informal economy business model to a GST business model, which is a formal economy model. So it is this pain of transition which I think the MSMEs are going through. And post that, businesses which adjust to the new world will actually be fine and do better.
How long do you see that?
I think we see it sometime in 2018-19. We see that hopefully getting better.
Second half?
Early to say. Let's watch.
But if and when it happens, you all will be.
We are very ready to, and I think let me again just give confidence, and as a member of the financial sector, that we do believe that we are in a position to finance and contribute actively to growth of the Indian economy. And we will be ready out there to finance the Indian economy as it chugs along the path of growth.
25% growth is a good number. Can you give us a flavor where it's come from this quarter?
I think there's a full chart. I think if you go to our presentation, you'll see segment-wise and sector-wise. But Jamin, you want to give broadly?
Yeah, if you look at for year-on-year, it's come across. So other than the SME business, you've seen growth about 25% coming in the corporate sector. I'm talking year-on-year. The whole consumer side, which we talked about, the credit cards, small business, home loans, that's again a mid-20s growth. The commercial vehicle construction equipment is actually a 40-odd% growth. So we've seen cutting across lines growth coming other than the specific SME segment we talked about.
And this trend you expect to continue next year?
Reasonable.
Similar.
Yeah, which is why if we have to give a guidance, our current estimate is a 20% plus loan growth from the current base.
So there's been a dip in the NIM side?
4.35%.
4.35. That is, if you look at the Q on Q, it's actually a slight tick up. Year-on-year, that's right. But that's 4.6 is a high number. If you look at the whole year, margins have been under pressure through the industry. And to that extent, I think 4.35 that we've ended.
It's actually moved up from 4.2 to 4.35 actually.
In the last quarter versus third quarter.
Quarter, but
Yeah.
year-on-year it is.
Yeah.
Going forward, what would be your NIM expectations for the current
You know, historically, we've given NIM expectations at around 4.2, 4.25%. So we would like to continue in that range, hopefully do better.
4.2 to 4.25?
Yeah.
Mr. Kotak, are you looking at any inorganic growth opportunities?
We look at it all the time and across sectors, and we continue to look. If there was, we would have shared with you.
Would you like to buy a bank?
We are open to be looking at across financial services, but in a manner which is sensible and value accretive for our shareholders. And as soon as we have something, we will definitely give you a shout.
Many brokerages like Nomura, for instance, have said that, with the recent developments at Axis Bank, this could perhaps be a good time for Kotak Mahindra Bank to reconsider the plans to acquire Axis Bank. Any thinking on that?
We also read the report. And, as we have taken a position on this, we don't want to get into any potential rumors or speculation. Our position is that if and when we have something, and we are looking at not only banking, but across the financial sector, we would certainly share with you.
So you have shared the embedded value for the life insurance. I think this is the first time.
Yes.
Well, many of your competitors peers are listing here because they want to list their subsidiaries. Any plans?
Therefore, our view is we need to give sunshine to our readers and investors.
No better way than giving sunshine.
So we are giving sunshine by sharing the numbers, and investors are free to look at the numbers, and at this stage, if they want to participate in the growth of financial services, including insurance, there is a listed company at the top which owns this business.
So there's no need to give more sunshine.
Sunshine, yes, sunshine we will give.
But are you
Question is if we believe there's a long-term growth in the life insurance business, moment we decide to divest from it, we are also hurting the shareholders of the parent.
So is there any plan to list the insurance business?
We have no plan to list the insurance business.
So also the CASA acquisition, which is very remarkable. What are the main levers driving this? Because last year we had cash demonetization. This year it's not coming on. So what are the levers?
I think you've got to keep one thing in mind, that we have always believed that the saver matters to us, okay? And when most other banks dropped their savings deposit rates, we said no, we would much rather give our core savings rate to continue, which is the now very popular, well-known, that up to 6% mark. Therefore, in the bracket 1 lakh to 1 crore, savers who have accounts with us continue to get 6%. So we did not fall to the temptation of trying to improve our short-term profits by dropping SAR rates, which many banks did last year. So we have continued with our view that the saver matters. We want to build a long-term, sustainable, sticky relationship with savers, and which is what we have stuck to through this period. And I think that is helping us both in terms of acquisition of customers as well as in terms of growing their balances with us. And some of you may remember last year when we had a meeting end of March, our total customer base was a little over 8 million customers. And I'm happy to report that our customer base has now crossed 13 million, which is a more than or a nearly 60% plus growth rate in our customer base. So we are very focused on growing customers, adding value to customers, and making sure that our proposition is superior and sustainable for customers to be sticky with us.
Where do you see this ratio moving up in the coming quarters, or maybe 1 or 2?
For the first time, we have crossed the 50% mark on the CASA ratio. Interestingly, our CA growth average also has been pretty decent compared to what is happening overall in banking on current accounts. So we are not obsessed by ratios. We believe that our stable and low-cost liability base should fund larger and larger parts of our balance sheet, because the biggest strength of a bank is the quality of its liability franchise. And on a lighter note, nowadays there is a very famous joke in banking. Assets are liabilities and liabilities are assets.
How has 811 also completed 1 year?
Yeah.
So could you give us some color on how it has?
811, of course, has been the mainstay for our growth in our customer base from 8 million plus to now 13 million plus. If you recollect, when we met end of March last year, we had given a guidance that in 18 months we will double the we desire to double the customer base. So in 18 months we said that we would like to add 8 million incremental customers as a bank. So in 12 out of 18 months, out of the incremental 8 million, we've covered nearly 5 million or more. So we are on track to doubling our customer base as we had estimated and guided to you last year. So 811 has been a very significant game changer for us. We think it's a unique customer experience. No, I can't think about any place in the world where a customer can open an account anytime 24/7 in a 3-minute period. And this is a huge customer-friendly proposition, and we are continuing to be committed to growing our customers, including through 811.